Let's get straight into a look at things. We had the rand falling against the dollar yesterday, and that really reflecting weakness in emerging market currencies on account of the Eurozone risk factor and global growth risk factor that's presented itself. What are you making of the kind of currency swings we're seeing right now?
Yes, indeed, Alishia, we did see the rand retreat yesterday and really in line with other emerging market currencies and risky assets. In the absence of data and events yesterday, the markets had very little to mull about except really the gloomy global growth outlook. Today, with the private bondholders only 25% of private bondholders only accepting the Greek debt swap, and with the target of about 75% needed to seal the deal, we could possibly see further risk aversion come through. So in the short term, we do expect the markets to remain preoccupied with global growth concerns and the fact that it's looking a little bit gloomier than ever at the present time. So we do expect some risk aversion, and we could see the rand coming slightly weaker during the course of the day.
So what we're seeing play out primarily on account of international factors. We've hardly got any local factors coming to bear right now, right?
Indeed, it has been, the rand has remained wedded to global growth conditions and developments in the Eurozone, and we have seen that come through over the past couple of weeks. And with the deadline, Greece's deadline coming through tomorrow, we could possibly see conditions even deteriorate further. So the rand is really remaining wedded to that. We also have some data coming out, data which came out this morning out of the South African market, and the rand didn't really react majorly to those numbers.
Let's unpack some of that data, because you're referring to the reserves data. We've got South Africa's net gold and foreign exchange reserves standing at $49.6 billion at the end of February. That's up slightly from $49 billion in January. Your overall impressions of the kind of activity we've seen from the SARB?
Well, we did see the gross number come in more or less in line with consensus at 51.9 billion. And that was on the back of the fact that we did see an increase in foreign exchange reserves as well as the gross gold reserves, which had improved. The increase in the foreign exchange reserves was largely on the back of both the SARB activity in the market as well as revaluation effects. And the 239 billion or so worth of foreign exchange reserves was more or less a moderate amount, and really indicates the fact that the Reserve Bank is not really intervening in the market to impact on the currency. Having said that, one of the highest levels of reserves that we are seeing at the moment could possibly eliminate some of the volatility in the currency that we have been experiencing.
While market reaction has been pretty muted to that local data that's come through, what we are anticipating are ADP numbers today, because that's the precursor for the big number this week, and that I'm referring to is the non-farm payrolls number that gets released on Friday.
Yes, indeed, Alishia. The ADP employment report is really looking at private sector employment in the US, and it is expected to come in slightly higher than what it did in the previous month, with around about 200,000 jobs being created. What is interesting, however, is the fact that the non-farm payrolls, which is due on Friday, is expected to come in slightly lower, and is a bit of a concern that the US economy is not really adding the kind of jobs that is required to keep the economy going and to see a consumer-led recovery. Consumers account for about 70% of that economy, so it is going to be a very interesting number to watch towards the end of this week.
So overall, Shireen, give us a few trading ranges that you've got pegged out, and let's start off with euro-dollar first.
Well, we do expect the euro to remain pressured on the back of that Greek debt swap coming in through tomorrow. But on the rand front, we're expecting the rand to possibly, if it breaks through to the 764 to the upside, we could see a move towards 768. However, if we do see conditions improve and risk appetite improve, we could see a move towards 750 again.